Ho ho ho! Merry Christmas! This is Tony Hixon coming to you from Hixon Zuercher Capital Management with this month's educational economic update. In this month's video, we'll discuss some of the news events that drove markets throughout the month of November and our interpretation on how these events might affect markets going forward in December and throughout 2018. Well, the U.S. equity market performed really well in the month of November. In fact, the Dow and the S&P 500 both reached record highs. The Dow crossed 24,000 for the first time in history, while the S&P 500 had its longest streak of record monthly gains since 2007. Throughout the month, we received a number of positive economic reports. For example, the housing market continues to do really well. In fact, new home sales reached a record high, a number we hadn't seen since prior to the financial crisis. This number eclipsed the record high that was set back in 2007. In addition, consumer spending rose throughout the month of October. This shows that the consumer is doing well financially as their wages are increasing and they're spending that money into the economy. As you may recall, GDP, or gross domestic product, is calculated, 70% of GDP is calculated by the consumer spending that occurs within our economy. So if the consumer is doing well, the economy will follow along right with it. GDP eclipsed 3.3%, we discovered throughout the month of November, reporting on the third quarter results. And we hadn't seen that much growth since 2014. Economists are now predicting that GDP may weaken a bit in the fourth quarter, but still predicting around 3% growth overall for the entire year of 2017. Looking back on November, another key event that drove markets was tax reform. Both the House and the Senate came up with their legislative bills on how they feel tax reform should take place. However, the two bills there were some discrepancies in them. So we're unsure if they'll be able to reconcile those discrepancies and make a compromise by year end, but our hope is that they will certainly do that, and the market is pricing that in. One of the news events that caught the market's attention by surprise would be that the Senate bill was going to delay corporate tax rate cuts until 2019. However, the House bill wanted to cut corporate tax rates in 2018. So once those two metrics are reconciled, we think that markets will start to recover back to new highs once again. As the tax debate continues, December will likely provide a lot of news for us to report on our next economic update. Another key driver to news is what the Fed is doing. And in fact, this week, the Fed will likely increase rates. In fact, the federal funds futures rate is now reporting there's a 98% chance that the Fed will increase rates this week. As always, we will continue to monitor these news events as they come out and make adjustments on our client portfolios if we see the need to do so. Well, that wraps up our educational economic update for December 2017. Remember, nothing that we've reported here today constitutes a recommendation in any way. If you would like to discuss your personal financial situation with us, please give us a call at 419-425-2400 and we'd be happy to help. On behalf of the Hixon Zuercher team, we wish you and your family a very Merry Christmas and a Happy New Year. This is Tony Hixon signing off for the month of December. Merry Christmas.